Hey, this is Ken Finnan at Capital Advantage Tutor, and it's my job to get you past the Series 7. So take a seat, let's get going, and let's figure out how to pass the Series 7. So I'm going to cover the Series 7 from A to Z over the next couple episodes, maybe 15, 20 episodes. Couple is not quite 15, but we're going to get there. All through the stuff, we've already done communications. I already done investor profile. I'm now going to work on customer accounts, and we'll see where that goes. So let's get going. Now, customer accounts is not the most exciting part, so try to stay awake. We're going to get through this. We just got to get through the customer accounts. It's good stuff. It's surprising how much on the Series 7 it'll be. Everyone thinks that it's all on the SIE, so then it will not be on the 7. It will absolutely be on the 7, and it will absolutely be enough to hurt you, okay? There are some things that I say, don't worry about it, won't hurt you. This will. You need to know that, so try to stay awake. Look, so what do we need when the customer walks in? You walk in, you sit at my chair, and I want to open an account with you. Yeah, nobody does it in person anymore. It's all virtual. But what do we need? What do we need to open a new account? Not what should we get? What do we absolutely have to get? What are we required to get? So what do we need? We need their name. Absolutely. We need, are they 18? You don't really, for FINRA, you don't need their birth date. You just need to know that they're 18, okay? 18. If they're under 18, what do? You kick them out of your office. As I say, it's never a good idea to be in a room with a 17-year-old. No good comes of it. You need the address, their name, are they legal age, address. Are they an individual or a corporation? You can come in with a corporate account or a partnership account, which we will get to later. And you need the signature of the principal, not your signature, the signature of the principal. And then your name, the register rep. Those are the things you need. I didn't put it on here. It just should be known. You need their name, legal age, their address, whether they're an individual or corporation, and you need the signature of their principal. You cannot open the account up without that part. Okay, to open an account, the left side is what we absolutely need. We need their name. Are they 18? Their address, not a P.O. box. Remember that, not a P.O. box. But once they open it, you can send mail to a P.O. box. It just can't be a P.O. box when they start. Whether they're an individual or a corporation or a partnership or whatever it is, and the signature of the principal. That's what FINRA wants, okay? Once you get those things, plus your name on the account, you can open the account. What FINRA would like you to get, make every reasonable effort, are these other things. Now, you don't need them. You can open the account without them. So it's to try really hard to get them. In reality, I don't think there's a single broker-dealer who will let you open an account without a Social Security number, because under the BSA Patriot Act, you have to get it. Okay, so you need the Social Security number or a tax identification number or an employer identification number. That's what you're supposed to make every effort to get. Who they work for. Do they work for a public company or not? If they work for a public company, there may be other issues you have to take care of. Do they work for a member firm? On this test, if you see member firm, they're referring to FINRA firm. What happens if they're a FINRA firm? If they work for a FINRA firm, you have to reach out to them and say, listen, do you have permission from your boss? So the employer of this customer, if it's a FINRA firm, has to give written, not verbal, because if it's not in writing, it didn't happen, permission to the employee customer, and then you have to keep that on record. And then you're probably going to have to send duplicate confirms and statements to that customer. You also need their financial info. Remember, when I say needs, you're supposed to try to get it. Financial information, their income, their net worth, all that stuff. Also, you're supposed to try to get their investment objectives, because you can't make recommendations without it. So you need a lot of this stuff to be able to make recommendations. But you can absolutely open the account if all they do is give you the left side. Okay, also, I'm going to say okay a million times because it's just the way I do. If you have a discretionary account, now there's two types of discretion. Discretion is where you, the client, or the client gives you the ability to make trades. Now, what does that mean? That means you can choose buy or sell, the amount, or the asset. If you choose any one of those three things, you need discretion or power of attorney, third-party authorization, whatever you want to call it. If you just choose the time and price, nobody gives a shit, okay? So basically, we're saying if you want to do trades without having to clear it through the customer all the time, you need third-party authorization, which means that you're going to need in writing before you do anything. It can't be in the mail. It has to be in the writing. So if you choose anything more than just the time of the trade and the price, so if you choose buy or sell, the amount, or the asset. So if I call you up and say, listen, buy 1,000 shares of IPM, and I hang up, you can do the trade even without discretion because I gave you buy or sell, the amount, and the security. Okay, now there's two types. There's full discretion and limited. Limited discretion, just do that, the trades. Full discretion, you can pay bills, you can write checks for the benefit of the client, you can withdraw your own fees, you can't rip them off, but that's the point. You're held to a higher standard. Now, remember something, that power of attorney dies at death or incapacitation. So power of attorney, third-party authorization, discretion. If the customer dies, it's over, or if they're deemed mentally incapacitated, like a coma, something like that, it ends right then. Now, there is another type of power of attorney that does go through that. It always ends at death. Remember, all power of attorney ends at death. Everything does, because you're dead. You can't make it this. You can't technically give them permission anymore. Durable power of attorney goes through mental incompetency. So if you have a durable power of attorney and I'm your customer and I get hit by a bus and I'm in a coma or something like that, you still have power of attorney over the account. Doesn't happen very often, but it is what it is. Now, you must have on record the signature of the named natural person and the date which the person who is authorized to give discretion. So you need the signature and the date that the discretion started. Has to be on record. Must have that at all times. Now, you are noticing something. I hope you did. You should know this from the SIE. The customer doesn't sign the account. If it's a regular cash account, customer does not need to sign it. The only one who needs to sign it is the principal. Now, what also could be signed is the pre-dispute arbitration clause. That is, you can't force them to do it. But if you get them to sign that, then any kind of dispute they have other than sexual or racial harassment or any kind of civil rights thing, they have to go through distribution. Go through distribution? No, go through arbitration. They have to go through arbitration. Arbitration is when you, instead of the court system, you go through a panel. So if it's under 100 grand or less, it's going to be one person. If it's over 100 grand, it's going to be three people. And they decide your fate. You make your case, you pay your fees, and then they make the decision. Here's the thing. It's binding and not appealable. That's why maybe people don't like it, because once you set it up and they make a decision, you have 30 days to pay or whatever it is. If you go through the court system, you can appeal. So the reason people like the arbitration, because it goes faster. You're talking maybe 8 months to a year versus years and years in the court system. So maybe I want to open up a numbered account. I don't want people to know who I am. I'm incognito. You can't tell who I am. Oh, guys, I'm Ken. Don't worry about that. If you want to open a numbered account where my name is not on it, I can do that. I can hide my identity. And it's just going to say like XJ47 on it or something like that. But the thing is, I have to sign something saying that it's actually my account. So I can't hide behind that. So if I do something wrong, at least they know whose account it is. But as it passes through the internal system, nobody knows that it's actually me. So there we go. Now, let's say all those records that you're keeping of the customer that must be kept for 6 years. If you remember, I've done the videos on how long you have to hold records for. And most things are 3 years. Formation docs of the broker-dealer are lifetime. Complaints are 4 years. This record keeping for this, okay, for like of the documents, 6 years. It's one of the big sacks: blotter, general ledger, stock records, customer information, customer statements. Those are all 6 years, 2 years readily accessible. Now, let's talk about the different types of accounts. So we have individual accounts. What are individual accounts? Individual accounts are like you, just open an account. What do you need? We just talked about that. It's one person, you can name a beneficiary, and that's the other thing. So sometimes you can set up an individual account as a TOD, a transfer on death account. What that means is that I have an account, I have 100 grand in it, I die, it goes to who I listed it. And the good thing is it bypasses the will. So if I have a transfer on death account to go to blah, 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 and I write a will, this supersedes that. So this money go there, and then the will decide where the rest of my stuff goes. If I have an individual account, even if I name a beneficiary or a TOD, they have no control over the account. They can't be involved. Remember that. They cannot make decisions or anything. They have no, if they call you up and say what's in it, you don't tell them. Unless I gave them third-party authorizations. Remember that I have to give them third-party authorization in writing for them to do trades or even ask about the account. So let's say you have more than one person, 2, 3, 4, 5, 10 people. You can open up a joint account. Okay. So the first three things I talk about are joint accounts. The bottom are not. They're just different types of accounts. So let's put a line here. Okay. So there's joint tenants with rights of survivorship, JTWROS. That means you and I open an account, more likely than not married or related somehow, or boyfriend, girlfriend, really close. We open an account and we both have 100% ownership of the account. Remember that. We both have 100% ownership, which means both of us can place trades, both of us can withdraw money, but the money has to be written to both of us. Okay, so that the check does have two names on it, if there's such thing as a check anymore. But here's where the difference between the accounts are. If I die, you get all the money. So if you and I open an account and I die, you get all that money. Okay, I think that works. If a tenant's in common, we open an account, you're 60%, I'm 40, you put in 60 grand, I put in 40 grand, I die, that my 40 goes to my estate, my beneficiaries, my heirs, whatever. And then you just have an account there. So joint tenants in common, it's a one account, but it's divided, meaning that my money is my money, your money is yours. And when I die, my money goes to my estate. Rights of survivorship, if I die, the money goes to you. So think rights of survivorship, it goes across to the other person. Tenants in common, it goes down to the beneficiaries, the heirs, the estate, the children, whatever. Okay, community property is really just an account where it's a married couple where, look, if once you get married, after a certain number of years, everything is kind of combined anyway. You want to think that you have your money or they have their money. It's not true. Legally, it's not a thing. So community property is once you're together long enough, it's your money. Okay, so that's what community property is all about. Now, let's jump down a little bit. The partnership account. That's not a joint account. That's one partnership, like a partnership between two people, business partners, whatever it is. It's an entity. What do you need? You need their certificate. You need the partnership agreement. There it says they can open an account. And you need the EIN number and stuff like that. A corporate account. Okay, so the corporate account is when a corporation opens an account. So what do you need for a corporate account? Okay, so the corporate account, you need the corporate resolution, first of all. The corporate resolution says we can open the account. You only need the charter for margin or options. So let's make sure we got this right. So to open a corporate account, I need the corporate resolution. That is just going to say that we can open the account, stuff like that. The charter is a deeper document. And really, we need it for options and margin. You do not need it for a cash account. So resolution always, charter is only for margin and options, the corporate charter. Good. Now, what about trusts? These are what they call fiduciary accounts. Fiduciary account is a trust. A trust is a legal account that you set up and you can put anything into it. You can put property, real estate, stocks, assets, any kind of asset. And what happens is it's kind of protected from you. So there's two types of trust. There's revocable and irrevocable. I should have typed it out, but I'm too lazy. Revocable means they can take the money back. The person who set it up can take the money back. It's not separated from their estate and it doesn't avoid probate. Irrevocable, irrevocable means you put the money in and it's in there forever. You cannot take it back. Now, how do we set up a trust? First, the grantor is the one who sets it up, puts the money in. Then you name a trustee, whether it's a lawyer or you or an advisor or whatever, and they manage the account. They manage it from beginning to end. Their job is to take care of it for who? The beneficiaries. You're going to list beneficiaries with 1, 2, 3, 5, whatever. If you set it up there, the trustee must manage the portfolio or the trust for the benefit of all the beneficiaries, not the oldest, not the youngest, not the weakest, not the poorest. You only care about the beneficiaries. You don't care about their children, their heirs, or anything else. Now, as a trustee, your job is to put the needs of the trust ahead of your own. So if you have a lack of experience on investing, you can hire an investment advisor to manage a portfolio because maybe you're not good at it. You can also hire a lawyer to do the legal stuff. You can hire an accountant. You can do all these things. The reason people put money in a trust, in an irrevocable trust, because it avoids probate at your death. The whole point of it is all about estate planning. Okay, so let's say You like to trade, buy and sell, buy and sell. 2021 was a lot of people, 2020 and 21, a lot of people learned how to trade. And what happens is if you hit a certain threshold of trades, they consider you a pattern day trader. Now, in a cash account, nobody cares. But if it's a margin account, what happens is if you do 4 round trips, what do I mean by a round trip? A buy and a sell of the same stock in the same day. You buy it at 10 in the morning, you sell it at 2 in the afternoon. That's a round trip. That's a day trade. If you do 4 day trades in a 5-day period, you are now a pattern day trader. And if you use margin, they increase your minimum equity to 25,000. So you have to have at least 25K in your account, but then you get 4 times that number to trade with. So kind of a trade-off. Another type of account that gets opened is called the prime brokerage account, a prime broker account. A prime brokerage account is when you have like one big firm that handles all your money. It holds your assets and everything, but it allows you to execute through various broker dealers. So instead of you having to move if you're a hedge fund, or it's not for us, okay? It's not for individual people. It's mostly for mutual funds or hedge funds or something like that. They use a prime broker to execute for them. And you can actually use different prime brokers for different things. Maybe like JP Morgan's good at equities and Goldman's good at debt. And then like Jefferies is good at futures or something like that. So you can use different prime brokers to help you do this. So what happens is you set up the account with the JP Morgan. You put all your securities, all your cash with JP Morgan. As you execute trades with the various broker dealers, okay, JP Morgan will get notification and then send the shares or the money to this broker dealer to settle. And when they buy or sell, they will then send the shares or the money back to JP Morgan, the prime broker. That's the way that it allows you to use different broker dealers. Now, this is Dewey, Cheatham and Howe. This will rip you off and it take you your money. These are the 3 different broker dealers that I'm using. So I'm a hedge fund. I go to buy IBM, use Dewey, Cheatham and Howe to buy it. They buy $5,000 worth of IBM. JP Morgan will send the $5,000 to Dewey, Cheatham and Howe. This is called an RVP DVP account. Then Dewey, Cheatham and Howe will send the money to the other person. They will get the shares, and then the shares go to JP Morgan, and it's done. And then if later you want to use rip you off to do it, same thing. So it allows you to use various broker dealers to execute trades. These are very big firms. They do all your margin, your back office, not so much your specific back office, but any kind of settlement and clearing and all that stuff, they do that. That's what they're for. Hey guys, thank you very much for listening in. Please, if you like what I'm doing, please hit like, subscribe, share. I'm helping you with the Series 7. We're going to get through this together. I have a bunch more videos to do. I did the SIE. Hopefully you guys watched it for there. We're going to keep going. We're going to get through this and then all the other ones. The next one should be the ERISA, the Employee Retirement Security Act. It should be out like 2 days after this, hopefully. Might even look the same because I might be recording it back to back. Again, please like, subscribe, share. If you like what I'm doing, please tell people, send it out there. You'll have a good night. See you later.